Welcome to our beginner's guide to understanding bonds. We are here to simplify the concept of bonds and explain how they work. A bond is a fixed income instrument where investors lend money to governmental or corporate institutions. For the unversed, bonds are a contract between the lender and the borrower. Investors, known as bondholders, buy bonds and provide capital to the issuer. In return, they receive periodic interest payments based on the bond's coupon rate as per the interest payout frequency. When the bond matures, the issuer repays the face value to the investor. Now, let's understand some key characteristics of bonds. First, we have the face value, the amount the issuer promises to repay at maturity. Next is the coupon rate, the fixed interest rate paid to the bondholder. Then, the interest payout frequency indicates how often bondholders receive interest payments, which can be annual, semi-annual, quarterly, or monthly. The maturity date is when the issuer must repay the bondholder for the face value of the bond. The yield is the return on investment for the bondholder, usually expressed as an annual percentage rate. Lastly, the credit rating, which indicates the issuer's credit worthiness. It is typically rated from AAA to BBB+ and classified as investment grade. To invest wisely, research is critical. Consider factors like credit rating, yield, and maturity date. So, are you all set to invest? Start your journey with Motilal Oswal Financial Services by simply logging in, choosing the bond that aligns with your investment objectives, and proceeding to place your order. Now, diversifying investment portfolios and generating passive income just got easy. Why wait? Invest in bonds from one of the trusted brokers in the industry. For more such updates, search for Motilal Oswal.